This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, May 21st, 2015. Euro dollar. So things get a little bit interesting with the euro right now, with the market pulling back over the past several sessions, but now coming into some good previous resistance turn support in the form of that neckline that we saw broken earlier this several days back on the 26th of March at the in the 110.52 area. At this point, look for the market to find support in this area ahead of fresh upside over the coming sessions. While only back below the neckline, a close below 110.50 would compromise the structure and suggest that the market is poised for a more meaningful bearish resumption back towards those 104.62 12-year lows from early March. Sterling dollar. So cable has seen some nice setbacks after trading to fresh 2015 highs in the previous week, trading all the way up to 158.15, though the market has now been supported below 155 in the 154.45 area ahead of this latest minor bounce. The market could be now trying to put in a higher low ahead of another upside extension back above 158.15 and towards the 160 area further up. But inability to hold above the 154.45 area on Thursday, followed by a close below, would suggest that the market is poised for a bearish resumption, and we should see an acceleration back to the downside. Dollar yen. So dollar yen has been bid up in recent sessions, though the market still remains confined to a broader multi-week, multi-month consolidation, and a break above 122.03, that high that we saw, the 7-year high from early March, is now required to open the door for the next major upside extension towards the 125 to 130 area further up. Inability to break higher, followed by a break and close back below the recent low that we saw on Wednesday at 120.58, would take the immediate pressure off the top side and suggest the market is now just trading back into the familiar range, looking for a move to the downside. Euro Swiss. So although we've seen a little bit of a setback in Euro Swiss in recent trade, the market is still looking to carve out a higher low at recent lows around 103 in favor of the next major upside extension above 105.25 and towards 108.15 further up. Any moves to the downside should be viewed as corrective, while only a break back below 103 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar has done a good job pulling back in recent trade after stalling out at around 81.63, and the market now could be poised for a more meaningful bearish resumption, with deeper setbacks seen towards the yearly and multi-year low at 75.33. A break below 75.33 would open the door for the next major downside extension towards 70 further down. At this point, only a break back above 81.63 would delay the bearish outlook. Dollar CAD. So dollar CAD has finally found a base, it looks like, in the 1920 area after the market had broken down significantly several days back from 123.50, trading all the way down to 1920. This latest push higher suggests that the market is poised for a bullish resumption, but we'll need to see a break and close back above previous support at 23.50 to strengthen this outlook and put the pressure back on the top side. Any setbacks now should be very well supported on dips towards 120, while ultimately only back below 119.20, that recent low, would delay the outlook. Kiwi Dollar. So Kiwi continues to show signs of bearish continuation, with the market stalling out several days back at 77.44 and looking like it wants to see a downside acceleration through the recent yearly low at 71.76. Any rally should therefore be very well capped ahead of 75, while only a breakback above 77.44 would compromise the bearish outlook. SPX 500. So although we continue to see this market grind to fresh record highs, now it's 21.37, any gains continue to stall out, and the market prefers to sort of trade lower after putting in a record high. At this point, though, we need to see a break back below 20.40 to really confirm the potential for a major top in this market, while inability to do so should keep the market continue to be very well supported on dips in favor of fresh upside. The break that we saw this week to fresh record highs does suggest that the market could be open for a fresh upside extension over the coming weeks towards 2200. But again, a break back above the recent high at 2137 would be required to strengthen. Key short-term support for this market comes in by the low that we saw back on the 12th of May at 2084. Gold. So gold had recently broken out above some key resistance around 12.25, but stalled out at 12.32 ahead of this latest minor pullback. Still, with the market being well supported on dips, there is the prospect for a longer, more meaningful base trying to carve out at present, with the market needing to break back above 1232 to strengthen this outlook and open the door for a more significant upside extension towards the 1300 area. Really, only back below 1170 would compromise this outlook and put the pressure back on that 2014 base at 1131.